Hello everyone, welcome to this week's video. Today is October 16th. I am Stephanie Choi, Director of Foundations and Nonprofits and Portfolio Manager at Genus. Today we have Mike Thiessen joining us. He is the Director of Sustainable Investments at Genus. Can you tell us a bit about what has happened in the markets this week?
Sure. So this week the S&P 500 was up slightly. So it had a big Monday with a lot of tech companies doing extremely well, especially Apple, which was up about 6% with the anticipation of its new iPhones, the presentation that happened on Tuesday. But then the rest of the week, the market really kind of drifted downwards. There was concerns about COVID-19 and more cases in the US, more cases in Europe. So that's really been weighing on the market. And then also there's the US stimulus bill that has looked kind of troubling throughout this week. There was some positive news last night about some possible positive talks, but throughout the week it wasn't looking great. But then today the market actually did pop up. There was better than expected retail sales in September. So that was quite positive. Pfizer came out with some news around a possible emergency use of its vaccine, possibly even by the end of November. So that's quite positive. And the housing sector continues to do really well. So overall, market was up slightly, but kind of a roller coaster for the week.
Yeah, thank you for the roundup. Like every week, there are so many things happening. So so entering this week, the third quarter earnings season also kicks off, and with major banks reporting earnings this week as well. What have we seen so far in terms of earnings performance that you could share with us?
So far, earnings have looked quite positive. Basically, earnings aren't as bad as people expected, especially with banks. Banks have been doing, and financials in general, I guess, they've been doing very well so far this earnings season. So overall, earnings are looking quite positive, and we're feeling optimistic about the rest of the earnings season.
That's great to know. So have we adjusted our portfolios for the rosier than expected earnings in Q3, or have we already positioned for it in our portfolios earlier?
So our signals have been telling us for a few months now to move back into more cyclicals, more economically sensitive names. So yes, we have been moving into moving our portfolios to be positioned more for this rosier expectation. We've been moving more into consumer discretionary, into industrials, into materials. We already had an overweight in technology before that. Financials, we used to be more underweight, now we're more neutral. So we've been doing this over the last few months, just because that's what our signals have been encouraging us to do. And possibly we'll continue doing that, but we'll keep looking at what's happening in the market, especially coming up to the election.
That's great to know. Like still on the politics front, the US election is still front and center as we have less than 3 weeks to go until the big election day on November 3rd. So what are some of the things that we should watch for that can potentially move the market? Or do we pretty much expect range-bound moves for the equity market leading up to the big day?
I think the thing that we know is that there's going to be a lot of volatility. Volatility usually is what happens before elections. But this election, there's even more uncertainty. This is quite a contested election, plus with with COVID-19 going on and questions around what's going to happen with mail-in ballots, what different states are doing, how different states are operating differently when it comes to mail-in ballots. There's so much uncertainty, and the market really doesn't like uncertainty. And because of that, we expect a lot of volatility. Overall, I think that we know that there's going to be volatility, and we'll keep watching the market to see what happens and how we should be adjusting.
Okay, great. And on the Biden victory point, Biden's focus on clean energy and a sustainable economic recovery, what are the implications for the green and renewable sector? And for example, this year we've seen phenomenal growth of green investments, more so than the tech sector rally. Do you think this is more of a long-term investor's mentality shift, or will this rally be reversed if a Biden victory does not pan out?
Yeah, I think that's a really good question. I think that if Biden does win the election, I think it will be really a long-term win for the green sector. I think that it'll be very positive there for renewable energy. If Biden wins, he's wanting to go and launch a Green New Deal. That would mean that he would be entering the U.S. into the Paris Agreement. which means that they would have to target zero net emissions by 2050. And so even though that's 30 years away, they still need to completely change their energy sector, and that is going to take a lot of investment. So it means a lot of government funds going into technology that could help them get there, going into a lot of new infrastructure. So that's going to be a lot of capital moving into the green sector. And of course, Biden wants to rebuild the economy after COVID-19. I think if Trump wins, then I think it will be a short-term hit for the green sector. But I think in the long run, the green sector is going to be very positive and will continue the momentum after the short-term hit from a Trump win. But I think in the long run, it's beyond a political issue. If you look at many areas of the world, renewable energy is the cheapest source of energy, and the rate at which it's becoming cheaper to have renewable energy is almost exponential. So I think it's really an economic issue. And then for investors, they're looking at what's happened with oil and gas, especially oil this year, the extreme volatility, and a lot of people are wondering if that's what they want to have in their portfolio. And beyond that, there's a lot of predictions whether we could be at the peak consumption of oil right now, given that people are working from home, not moving, not driving around as much, not going on trips as much. And people are reconsidering a lot of their values and where they want to be spending their money, where they want to be investing their money. And so I think that has really helped with the shift of capital into more sustainable funds, into more impact funds. And I think that movement is going to continue. So overall, I think that there's a lot of momentum moving towards the green sector. And I don't really see that changing, even if Trump does get back in.
It's very encouraging to hear that. So thank you so much for your insight. I guess that pretty much wraps up our weekly video today. Thank you for your time, and thank you, everyone.
Thank you.
Thank you. Have a good week.